This is the May 16 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Jim McCormick. He's at agmarket.net out of Barrington, Illinois. Chip Nellinger is here from Blue Reef Agri-Marketing in Morton, Illinois. And Brian Stark joins us from the Andersons. He's based out of Mansfield, but travels back and forth through Delphi and the Climbers facilities in Indiana. Thank you all for being with us. Commodity Week, of course, is a production of Illinois Public Media. It's public radio for the farming world. Find us online at willag.org, WILLAG.org. Jim McCormick, let's begin with you. We'll get a list of items that you think we should discuss for the day.
Yeah, Todd, I think one of the few things we definitely need to talk about is planting progress. When we're up here in northern Illinois where I'm at, we are definitely fighting it. Farmers are getting a little bit nervous about it. Some are comparing it to 2019. I don't think we're quite there yet, but I think it's there we need to talk about. The other thing I think is you really need to talk about is demand and maybe the lack of it from China, which could be maybe something we may offset maybe potential losses we're going to see due to the later planting.
Chip Nellinger of Blue Reef Agri-Marketing, your list, please.
Yeah, I think that was a good start. I'd say fund money flow is another thing we need to maybe discuss and talk about. Outside markets with the Federal Reserve interest rate decisions in question are always going to affect our markets as well.
And Brian Stark, anything from you?
I think wrapping up all those topics in a bow is what producers need to be doing right now with remaining old crop stocks as well as new crop, given some of those dynamics that's helped the market rally here over the last week to 10 days. And obviously we've self-corrected, but we need to talk about next steps there.
Okay, so let's do that. Wrapping them up with a bow, because as we've been reporting on different fundamentals that seem to be friendly, there's always a tendency for those who have something to sell to believe that it's worth even more. I take it you're of a mind that that may not be the case.
Yeah, I think we've seen some encouraging signs from the producer here over the last week as the board's made highs that we haven't seen since January of this year and rewarded the market, and rightfully so. I think, obviously we'll touch on planting progress here later, but certainly we can go back to prior years, and we've never really had a year where we didn't get the crop planted, and I think sometimes seasonally prices tend to peak out towards that middle of the third week of June. So we've really encouraged growers that with a comfortable balance sheet that even if we have some delays, we got a long ways to go to prove out the yield. We might lose a few acres, and that certainly is supportive, but we're carrying in quite a bit of stock, especially on corn. And I think the grower needs to take advantage of putting in at least some floors and playing a little defensive posture with the remaining old crop stocks as well as new crop.
Chip Nellinger, Brian Stark, is channeling his internal Darryl Good there, who always said farmers get the crop planted. There are some delays, as Jim suggested, and we'll talk a bit more with him about that as well. But in the Peoria-Morton area, how are things going?
Yeah, I would say from all the producers we talked to across the Corn Belt, from maybe 40, 50 miles south of Peoria, Morton to 60 miles north was maybe one of the wettest areas in the entire Corn Belt. We had a lot of activity in that area from last Friday over the Mother's Day weekend into Monday before it started raining. So producers had about 4 days, shy 4 days of running and made a lot of progress. And so, there's still more to do. And it's kind of fits and starts type of a thing. And if we miss some of these rains the next couple of days, there may be some more activity that can start in some of those areas. But there's still a lot. I'd say we're probably no more than, half to two-thirds done on corn, and still a fair amount of beans left to plant as well in that area.
Just a quick note that over the weekend, the stars aligned, in this case, the sun, and that solar flare managed to make its way to the earth. Really beautiful skies with the aurora borealis. However, it interfered with GPS. That frustrated producers whose equipment was stalled in the field, along with rainfall, of course. Jim McCormick, in your area, how far behind are producers?
Yeah, I would say we are on the end that less got in and what they thought. I mean, There's a few guys that are trying to go today, but it's the sandy ground. The problem is the dry, the sandier ground was already planted earlier. So we are really struggling here. But we've got clients from our ag market team all across the country, and Southern Indiana, I had some clients talking today that they really, they were comfortable. Now they're getting a little bit leery with all this rain that's in the forecast for that part of the state. They're really afraid they're going to get behind. But it's interesting, Todd, talking to some of our clients in Iowa, their psychology has changed dramatically from about 3 weeks ago. This rain, this moisture was just something they were very happy about to get. Now we're hearing a lot of people talk about issues of getting the crop out of the ground, compaction issues. They're trying to hoe it, and they're a little bit worried about their stand count right now. So, I think this crop size is definitely going to be debated over the next couple of weeks.
Brian Stark, coming back to you on this crop being planted issue. By the time we get to Monday, given what you know about crop planting conditions and potential pace across the whole of the Midwest, how much further along do you suppose producers will be than the 49% they were on this past Monday?
Yeah, I think nationally, obviously, we don't touch, or I'm not as close to the East Central Illinois and West Central as to the East Central Illinois and West Central Indiana area. Today, we're 65% complete. I think nationally, given some of the rains, you may get to the point where we're maybe pushing 60% complete. I don't see it going much beyond that, but we're 2/3 planted in the east and around the rains. Indiana and our area, Delphi, Logansport, had an extra day when the system started crossing the Mississippi. They were able to continue to plant on Tuesday. So I think guys feel good, yet we still got 1/3 of the crop to plant. So there is some things up in the air, but most producers are sticking with their original intentions, and I don't see much change until you get closer to that final planting date in our area of June 5th on the corn acreage side.
So the FarmDoc team has done some digging on this issue and was looking back to see what late planting really looked like and what impact it has had. Scott Irwin had written that article. You can read it at farmdocdaily.illinois.edu. He started to be used after the first 5 years, and it was May 30 for late planting from 1981 to 1985. I believe, and after that, May 20. So the question is for you, Jim McCormick, or maybe for all of you, when will the trade decide that this has become a real issue and start to respond to the marketplace? 18% is normal after May 20, the normal amount of late planted corn, according to the study that Scott had done, by the way. So, Jim, what do you think?
Well, I do think some of it, we've had a pretty good rally to begin with out of the last couple of weeks, so I think the trade is starting to react to it. The funds are carrying that massive short position. We're bigger than they seasonally have, or normally would, I should say, and they're getting out of a lot of it. It'll be interesting to see where that number is here at the end of the week, if they're actually flat. But I would say if you get closer to we get into the middle of June, I think people are really going to get nervous about it. The one thing about the planning progress, you were asking, how far can we be, for next week? I'd say, the trade's you're going to hear a lot of people talk, 10 to 15% increase. The one thing I caution people, Todd, I'm going to caution my clients is I do question if the industry truly has a grapple of how quick we can actually put grain in and how aggressive producers have been the last couple of years. They've made a lot of money, and they invested in bigger planters and more importantly, high-speed planters. I mean, I had a couple clients, I talked to earlier this week that they were averaging 800 to 900 acres a day last week getting this crop in, which just seems unfathomable just a few years ago. And that wasn't a huge operation. That was a father-son operation, just working very, very hard and having everything clicking. So, it's going to be really interesting to see where this number's at. If I've got to make a guess, I would say as a whole, we're probably a little bit further along than what the USD numbers suggest.
Yeah, I would guess, I think, Jim, that a farmer with a 16-year-old planter probably can, if they're pushing along roughly 250 acres a day, fairly easily, I think. I'm not quite certain about that. That's probably pushing kind of hard, but but they still can plant fairly quickly. I don't know, Chip Nellinger, Brian Stark, you have any thoughts on this? I guess, Brian, I'll let you talk first.
Yeah, no, I agree with you. Obviously, coming from a farming background, I can align with those thoughts. I think 200 to 250 acres a day is fairly good with a 16-row planter. And I would agree with Jim. I think as we head past, it seems like the long holiday weekends, maybe even a touch sooner, that if progress lags, say, coming off the Memorial Day weekend here in another 10 days, you could start to see a little bit of renewed interest in the funds coming back in and building in some premium back into the market. But certainly once we get past the June 5th final planting date, if progress lags, I think then is when you start to think about, acreage. I think the Dakota's final planting date's the 25th of May. So some of the fringe areas is something to pay attention to. But I think sometime in the next 10 days to 2 weeks, if we're not advancing to that normal 18% percentage that Scott put out, I think you'll start to see some premium come back into the market.
Chip, I hadn't thought about that planting pace, particularly as it relates to North Dakota. They were 22% along on Monday. I did look that up. And that sounds like they're behind, but normally on the 5-year average, they're at 15%, so maybe not. What do you think about the planting pace?
Yeah, I think a couple things. I take from the market action the last couple of days that the corn market maybe thinks we got a little more planted, or they're not as concerned. We've seen a little setback here, and corn's acting a little bit weak. I'd say a couple things. I would agree that coming out, next Monday, I think could maybe be a little bit higher than expected, only because there was so much done over the weekend, and I don't know if we get a really good, accurate picture on these planting progress reports of what happens on Saturdays and even Sundays. It's supposed to be as of Sunday afternoon, I believe, but I'm not so sure it's always that accurate with all the activity that we had Saturday and Sunday of last week. It might be a little bit higher than expected, and the market feels like that, but I agree that coming out of the Memorial Day weekend here on the 28th, that's going to be the key, right? And probably the rainfall between now and maybe this time next week is going to be key to this as well. So, I think when it gets into the week of Memorial Day, if we're still struggling and you've got areas that, are well behind the 8 ball, still have 30, 40% of the crop left to plant, then the market starts saying, okay, now we don't have 181 in our sights anymore. We got to lower that. We're likely not going to have a 2.2 billion bushel carryout. It's going to be somewhat lower than that potentially, and then maybe, another ratchet higher. But right now, the market feels like it's going to get planted. And to your point, we can get it planted in a hurry. And there was a lot of activity done for 4 or 5 days in a big swath of the Corn Belt earlier this week and last weekend.
Soybeans seem to be on pace. Will they stay there?
I would think that they do stay there. I really do. But again, I think that, it kind of depends on how much rainfall happens and where next week, and even that week of Memorial Day. I think it'd take a little bit, longer into that first week of June, and having 25-30% of the bean crop left to plant, and after the start of June, before the bean market says let's ratchet potential yields lower.
Yeah, so just factually, one other thing about the crop progress report as we make our way into the end of May and into June, that report, which with the planting pace, will show how much of the expected acreage it has been planted. So if expected acreage to corn goes down because it's late, then the planting pace speeds up appropriately to show that, more corn is actually in the ground because there's fewer acres to plant, I suppose, or something along those lines. So we'll have to keep track of that. And that also means there could be more soybean acres out there. I don't know when that transition might take place. It's difficult, especially if chemicals are already in the ground. I think that's a topic for a later Commodity Week program. I do want to talk about some of the things that have been happening on your list as well. And I'll come back to Jim, to you, where you highlighted the lack of demand from China. And this is both long and short-term issues. One of them may be a trade issue. The other is just simply Brazil. Can you tell me what your perspective is?
Well, I think the real big perspective for us is the new crop sales. They're zero as far as we know, unless they snuck an unknown destination sale. Normally, they've been a buyer for this time of year as they start trying to procure for new crop. And the real question is that because they feel that they can get all their needs from Brazil, or does it have more to do with maybe politics? I mean, let's remember, when President Trump was in the office, he put on a bunch of trade tariffs on them. President Biden did not renew them, did not let them go. He actually just increased some more tariffs here this past, recently on the electric vehicles. Trump has said he's going to raise it even more. So it seems like we've got two presidents that right now it's trying to see who can be more aggressive in politically or at least economically fighting China on these tariffs. And I think it's a real red herring that they haven't bought beans. And if we don't have a bean production problem and the USDA's projected ending stocks of 444 look like they're coming into fruition and South America has a big crop. To me, when I look at it, Todd, that just tells me $12 beans are massively overvalued, unfortunately, and they're probably going to go a lot lower.
Are you making appropriate sales into that then?
Yes, I'm encouraging guys to sell these $12 beans here because, like I said, supply-driven rallies just tend not to last. They tend to burn bright, they tend to burn fast, but they burn out quick. And we, like you mentioned earlier, we always get the crop planted. And even if you lose acres, the market gets to the point where they say, we got it planted. Even in 2019, the flood year in 2019, you still had a big break when the market essentially said we priced it in. And then you come back to the demand. Demand-driven rallies are the ones you like to see. They're nice 45-degree angles up on the chart, and they tend to go. Supply ones, you ration demand out, the market gets tired of it, and then down we go. And you look at the fact, like I said, the stocks are building, the politically uncertainty. I think the story is, not how much higher we can go without a weather problem. It's how far we could fall without a weather problem.
Brian Stark, your assessment of the soybean market?
I agree with what Jim said. I think you couple that with a massive trade miss of the domestic crush for April this week, I think just adds to the uncertainty of bean demand if we want to stay on beans. And I think when we tie it back to the planting progress, when we talk to growers, if they're friendly to the corn market because of the delays, that potentially becomes more acres that switch to beans. You couple that with demand that seems to be slowing. We talked about the tariffs that President Biden put on. One of the ones that we were watching was whether he was going to put a tariff on used cooking oil that's been imported that impacts our potential demand on the soybean oil side. So that did not occur. So I think right now, if there's a particular old crop, new crop, corn bean play, I think new crop beans for sure is probably my top priority of getting some sales established, whether that be some sort of a floor or a straight sale, cash sale or hedge to arrive contract to protect what could be a fairly overvalued bean price.
Are farmers willing?
Yeah, I think they have been engaged when Novi bean futures got above $12, and I think we even had some that got up towards $12.25 here over the last week, and there's been some increased sales. Certainly, growers are reluctant to make flat price sales today, not knowing about the size of the crop and what that means for fall basis, but we did see quite a bit of hedging.
And Chip Nellinger, what are your thoughts?
Yeah, kind of scary that when we all agree on this, I couldn't agree more. We got demand issues. We've got, this renewable renewable diesel industry that we're trying to prop up, and we're screwing that up, allowing, all this, used cooking oil out of China. They're buying Brazilian beans and selling us the remains of that, and it's hampering that industry. That's hard to get the demand there that we thought might be there. I thought it was a gift on last Friday's USDA report to have a 445 million bushel bean carryout. They increased total demand was 246 million bushels above a year ago. It was mentioned earlier, the big miss on the crush, the big goose egg we have as far as Chinese new crop bean purchases, and we're assuming we're going to, use 246 million additional, bushels than a year ago. So I think that's a little bit pie in the sky, a little bit of a gift. They won't change that next week or next month, But you get 6-9 months down the road and we're not hitting these demand numbers. They pull that back. We plant a few more acres. It's got the recipe for, something that has a 10 in front of it, and maybe even a 9 in front of it if we raise any type of crop at all this year.
Jim McCormick, I'll stay with the soybeans for a second and return to the FarmDoc Daily team. The agricultural economist a few weeks ago had taken a look at the CONAB numbers, and those were released again this week. They had an increase both in corn and soybean total production based on acreage, though yield, they admitted, was not as good, and they're still calculating what Rio Grande do Sul and the flooding there will really mean. But the FarmDoc team essentially said the CONAB numbers compared to the USDA numbers are more likely that the CONAB numbers have to adjust their total production in some form, or they simply will run out of soybeans there. So have they gotten those numbers correct? And is there a friendly tone to the current set of CONAB numbers that might disappear on us?
Well, I mean, I think, Todd, it really comes down to who's right. Like you said, if like your U of I team's right and the CONAB numbers are right, it's really going to tighten that balance sheet up. But, what's really weird is, our government and the CONAB, the size of the south of that crop is a mile wide. But, could be very friendly or bearish depending on which one it goes. But what's interesting is if you look about how we're looking at China and what China says they're going to only import 94.6 million metric tons of beans. We say it's going to be 109. So if you look at the world right now between the Brazilians, the U.S., and the Chinese, there is a massive disagreement of the size of the world production as well as the potential demand for the world production. And, and it may be a situation, it may be where essentially the groups that be may just agree to disagree on what it's going to be. Because of this uncertainty, I default to our clients say, you better book profits when you can, because I think in the really big picture, I think like I said earlier, the odds are we're going to go down with anywhere close to a normal trendline yield.
And then I'll come back, Brian Stark, to you. The Chinese economy is still growing, but at a slower pace. And the Chinese have turned to the Brazilians more and more often for both corn and soybeans. Certainly, it appears that at this time that they've not turned to the United States for soybeans for the new crop. We worried last fall, and I think rightfully so, which came pretty much to fruition, that the window for U.S. soybeans to be exported would be smaller than normal. How do you put that together for this growing season?
Very similar. I think we're going to be still fighting the same uphill battle, trying to be world price competitive. And the South American bean offerings in the market have been, close to $1 under our FOB offerings for export most of the crop year thus far. So the window of opportunity for the U.S. to gain our normal export share this fall is going to continue to shrink. And I think that's part of the reason why we've been trying to look at this renewable diesel, to look at other uses domestically to grow our domestic demand, because it feels like the U.S. has been outpriced on the export side from other countries in the world, whether it be Russian wheat or South American beans. I think we're struggling to be competitive, and we're going to continue to see that. And I think a lot of it also has to do with the strength of the dollar. And I think we haven't really talked about that, but if the dollar stays strong, it adds an even another layer of uncompetitiveness for us to do that.
Chip Nellinger, the strong dollar. This was on your list as interest rates, outside markets, and fund money flow. Tell me what you've been thinking.
Yeah, I think a couple things, Todd. We've seen the funds come out of a lot of their short positions in corn, beans, and wheat. In fact, you could probably argue that as of earlier this week with some of the buying we saw in the wheat market, they may have actually flipped a little bit slightly to the long side in wheat. They're still not there in corn or beans. Interesting statistic is that over the last 16 years, 16 out of 16, this being the 17th now that we haven't seen it yet, but the funds have got long corn and beans at some point net long during the growing season. Will we see that again or not? I'm not sure. I think the other thing that, as far as the outside markets and the dollar specifically, a lot of people worried about this stronger dollar, but we've actually done a little bit of technical damage to the dollar chart earlier this week. We closed below the 50-day moving average on Wednesday. We pegged right to and held so far a pretty major trend line drawn off the lows from early in 2024 and then the low from back in February. If you would violate that to the downside, it's a pretty crowded long trade on the dollar. And so if the path of least resistance is to the downside, that could kind of reignite some fun money flow into the grain markets and commodities in general. And if you saw a lower, disposition to this dollar over the next 2 or 3 months, it could actually be something that maybe helps the wheat market the most as we become real competitive in the world. And we're going to have a fair amount of supply to put out in the world export market on wheat. So a cheaper dollar could really help that market out.
Turn our attention to the wheat market. And I'll start here with you, Brian Stark, and then work my way through Jim and Chip on this. Russia has had a difficult time early this year with a portion of their winter wheat crop very dry for a very long time. Once they got past last fall, which it was established well. And then there have been some hard freezes, more than one, this season so far. What do we think about the wheat crop there, Brian, and the rally that we've had in this marketplace and what it might or might not represent as it relates to the other commodities?
Certainly they've been dry. Their current estimate, I believe, is 2.5 million metric ton below what the USDA just published last week in its monthly S&Ds. So certainly their crop potential shrunk, and that certainly spurred some funds to cover their position. But again, not to sound like a broken record, the wheat growers that we talk to, we've got to levels that are profitable. And I think selling wheat at these levels, whether it be 2024 and even 2025, now that it's pushing 735, 740 on July 25 futures, we've hedged some of that because we're still not price competitive from an export perspective, even though the trade's focused on the shrinking Russia crop. We're not the leader in getting new business today, and the higher we go, it continues to push us further away. So the demand side of the wheat, I think, is the problem, and I think, again, we want to continue to take advantage of the wheat rallies when they occur.
Jim McCormick, your thoughts on wheat?
I think pretty much what Brian said is correct. I mean, I think the funds got out of it. They trade the markets. They're trading the headlines coming out of Russia having the frost. You do have some dryness issues or other production issues. But the key, I think, is you got to take a profit when you got it. You're looking at a carryout that's still projected at 766 million bushels. We are not short wheat in the United States at all. And I prefer to encourage producers to lock in the profits. If they want to play the what if, that's what I'd use some options for. There are some what ifs. I mean, the Ukrainian situation seems to be getting a little bit more intense. To me, it seems like at times Russia is going a little bit more after infrastructure with kind of the mentality, if I can't win the war, I'm going to destroy the infrastructure, which could lessen the amount of wheat or any product coming out of there. The other wild card I'm watching is India. India's stocks are down to 18-year lows. They depleted a lot of them, Todd, as a way to drive down food prices as they're also in a presidential election cycle. If something would happen to the India situation, their crop would not be there, or they panic and they got to come into the world market, you could see the world market react violently higher because of a food scare. But right now, I think as a producer, you got to take the defensive approach. The risk is to the downside and lock the profits in when they are there.
And Chip Nellinger on wheat, your assessment.
Again, spot on with what those two previous comments were. The cynical side of me says, everyone's thinking the same thing. Can it be that easy? I think that, so I agree with having some upside potential on this thing. Lock the profits in while you have them. Clean up 24 as far as you can get, not knowing what your production is on the winter wheat side. Get a heck of a start on the 25. It's profitable. But I think if there's any bullish story longer term, it might be the wheat market. And if we do see some sort of lower dollar, some inflationary pressures, these funds with a fundamental story on the wheat could really pile in and do something interesting. I'm not saying that's going to happen, but I'm saying, lock the profit in, like these guys said before, and maintain some ownership, whether that's call spreads or minimum price contracts. Lots of ways to do that. Maybe years in puts instead of sales. You've got the upside of your physical bushels. I think there's a real story to be had here. I think you're not going to know for several months. Russia's not going to tell the truth, but there's so many things that you've thrown at them with dryness, with 4 or 5 freezes. That dryness extends over into the Ukrainian growing areas as well. And, to the point of India, they're a real wild card. So even though you're not going to know from Russia, they won't tell you. And if they do, they're not going to tell the truth. The world cash markets will tell you eventually. So I guess, parroting what those guys said, definitely lock some risk in here, lock some floors in. But I guess if there's anything out there, and I shudder to say this because I hate the wheat market, I hate trading the wheat market, I think if there's the bull case over the next 6 to 9 months, it probably is wheat, which, if that happens, would spill over and help support the corn market a little bit too.
Let's get a final word from each of you. I'll start, Brian Stark, with you from the Andersons. Your final word for the day.
I think I'll just highlight what I started the call with, and taking advantage as the market gives us a seasonality to tend to rally here through the middle of the third week of June, and any old crop and catch up new crop sales, whether it be minimum price or making hedging sales, needs to be accomplished here as we move forward.
Chip Nellinger of Blue Reef Agri-Marketing.
Yeah, Todd, I again, not to be too cynical, I think you have an opportunity at hand. We're off the highs a little bit by 14, 15 cents in corn. I can't tell you if I've heard it once, I've heard it 1,000 times. I'm going to sell new crop corn when December futures get to the gap at 502. There's probably 800 million bushels for sale there. You're either not going to get there or you're going to blow right through it. That seems too easy to me. So I think that the opportunity in new crop corn is in the upper 480s, the low 490s, right where we've been. Make some sales, get some put strategies established. Beans the same way, north of 12, and then have some upside potential with it in case we run into a further weather problem. But don't get in the mindset that, hey, things have changed and, we're going back into the gap at 502 and above, and, we're going to see $13 beans. It's possible, but it's also possible we're in the process of putting the highs for the year in, too.
And finally, Jim McCormick of agmarket.net.
I think Chip nailed it. I think a lot of people want to sell that gap at 503. I would agree with Chip. I think you got to sell it here. I did sell some for some clients here when it hits 200-day moving average. That was kind of my one target I'm looking at. I mean, the farmer out there, Todd, he kept saying all winter, I want to rally, I want to rally. Well, folks, this is your rally. Our viewpoint is the risk is still to the downside more than to the upside. The uncertainty of the world, the uncertainty of the presidential elections. When you have profitability, we believe you got to take it, because if we would have a trend line yield, we haven't seen it for a while. A lot of people don't think it can happen because of delayed planning, but anywhere close to trend line yields with an overstatement of demand, like we mentioned here earlier, this market could go a lot lower than what you're looking at, especially on corn. You're looking at stocks to use around 14%, back from like 2014 to 2018. You traded corn down to 350 with stocks to use at near those same levels. So the risk is to the downside. Don't look a gift horse in the mouth. Market it while it's profitable.
Commodity Week is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like, on demand online at willag.org. That's willag.org. Our thanks go to our panelists this week. They have included Jim McCormick of agmarket.net out of Barrington, Illinois, Chip Nellinger of Blue Reef Agri-Marketing in Morton, Illinois, and Brian Stark of the Andersons, located in Mansfield, Illinois. I'm U of I Extension's Todd Gleason.